millions are spent, months of effort go in, and yet many apps never make it to launch. This is the reality behind most trading app builds. And while the market is projected to reach $140 billion by 2030, most failures don't happen because of a lack of opportunity. They happen in the gap between idea and execution. This video is your guide on how to close that gap. Why do trading apps fail? They fail because three critical issues are missed early in development. First, compliance requirements that surface too late and stop the launch entirely. Second, real-time infrastructure gaps where even a small delay breaks user trust. And third, weak fintech-grade security that puts both data and transactions at risk. Miss even one of these, and the product rarely makes it to scale. What users expect? In 2026, at a baseline, users expect real-time market data, instant buy and sell order flow, a clean portfolio dashboard, price alerts, and secure KYC authentication. These are non-negotiable. Then there are 2026 differentiators that separate successful apps from others: AI-powered insights, fractional shares, and a paper trading mode. Planning for these is important because in modern trading apps, features don't just define functionality, they define credibility. Now comes how to build a stock trading app, step by step. Step 1. Discovery and planning begin by defining the target users, mapping the compliance path, and finalizing the complete feature scope. Step 2. UI and UX design focuses on creating wireframes, interactive prototypes, and mapping the full trading journey for a seamless user experience. Step 3. Backend and API integration is where the core trading engine is built, real-time market data is connected, and broker APIs are integrated for order execution. Step 4. Front-end development brings the system to life with real-time user interfaces, portfolio tracking features, and a cross-platform build for consistent performance. Step 5. Security and compliance implementation includes KYC verification, AML systems, encryption protocols, and authentication layers to ensure full financial-grade protection. Step 6. QA testing and launch involve load testing, device testing across environments, performance validation, and final App Store release preparation. So, what does it actually cost to build a stock trading app? A basic MVP with core trading features typically costs between $20,000 to $50,000 and takes around 2 to 3 months to develop. As you move toward a mid-level trading platform with advanced functionality and better scalability, it can cost from $50,000 to $150,000 with a development timeline of roughly 3 to 6 months. And for a full-scale trading platform with AI capabilities, compliance systems, and enterprise-grade security, the investment can range from $150,000 to over $300,000, with development timelines extending from 6 to 9 months or more. For teams planning to build a stock trading app, starting with the right development partner is critical. JPLoft is a leading stock trading app development company with over 15 years of experience, more than 1,100 solutions delivered, and expertise spanning across AI systems, IoT integrations, cloud infrastructure, and advanced fintech product engineering. The focus is not just on building applications, but on building scalable and compliant financial systems. Click the link in the description to get a free consultation today. If you found this helpful, like, share, and subscribe for more insights on building scalable digital products.